Citigroup third quarter profits beat estimates on Friday as it benefited from a surge in trading revenue, investment banking fees, and insurance payments while undertaking its biggest overhaul in decades. The bank said it will cut management layers from 13 to 8 as part of the sweeping reorganization. Now, this is the monthly chart, and as you can see, we have a downward bias in price from the highs of June of 2021. We can see price has been consolidating over the past 18 months. We also have the pandemic lows that was established back in March of 2020 at the $32 level. Before we continue with the analysis, let's look at this video. It is coming from CNBC as it talks about their earnings.
Citigroup out with third quarter results. Leslie Picker has them. Leslie, what you got? Look at that stock already moving up
Andrew,
higher.
You can add Citi to that list of companies beating expectations, sizable beats here, especially on the bottom line for Citigroup. That beat was about more than 30 cents here per share. The street expecting 121 per share. Citi reporting 152. Now, including divestitures, it would be 163. On the top line, Citi generated $20.1 billion, up 9%. In the quarter, analysts had that figure pegged at 19.3. So top and bottom line beats here. In the release, CEO Jane Fraser mentions the organizational changes that the firm announced a few weeks ago. She said, when completed, quote, we will have a simpler firm that can operate faster, better serve our clients, and unlock value for our shareholders. However, there aren't any specific details in the release about what the reorg is going to cost or what it's going to save. The news was announced just a few weeks before quarter end, but there will likely be a lot of questions on today's conference calls about this specifically. As for Q3, Citi is highlighting some superlatives that help generate its quarterly beat within services, treasury and trade solutions. That TTS division does cash management for large corporations, had its highest revenue quarter in the last decade. Rates and currencies revenue within Citi's markets division had their best third quarter in a decade. And even investment banking saw gains up 12%, excluding some lending marks. Debt capital markets showing some increased activity, but Citi also had mandates on the ARM, Instacart, and Klaviyo IPOs during the quarter. Personal banking and wealth management revenue higher by about 10% as well. Citi has been streamlining its focus and divesting international businesses throughout the past few years or so. The firm said 2/3 of that process is complete, with the Taiwan Consumer Banking Business closing in the third quarter. Citi shares up about 1.5%. They were up as high as 2.2%. I saw right around the time that release crossed. So come down a little bit, but still up about 1.5% in the pre-market, guys.
Okay, so a question for you, which is that when you think about the earnings here, why is it that the provisions that we've been seeing in these reports, they seem a little counterintuitive with more cautious tones from CEOs in the statements thus far?
Yeah, it's a good question, Andrew. So, you have the Diamond commentary from this morning where he talks about how, we're in kind of the most dangerous time we've seen in decades, given all of the geopolitical aspects in Ukraine and now, of course, in the Middle East. And then here we've got some commentary from Wells Fargo, which is hosting their media call, which kind of issued the same kind of cautious tone surrounding geopolitics. And yet in these releases, we see a little bit of release of reserves. And so there is kind of a disconnect there, but you have to take a step back. A lot of these banks have been provisioning for more in the last few quarters or so, just in, with the expectation that there could be some sort of a recession on the horizon. That recession keeps getting pushed down the road. So they're just trying to adjust to that, and their various models are doing the same thing.
To continue with the analysis, let's drop down to the weekly chart. And again, from that sideways price action starting from last March of 2022, we can see we do have a leg down that was established back in June. And again, you can see another period of consolidation that took place in the last several weeks. Again, this is the pandemic lows. Let's scroll down to the daily chart. So this was Friday's price action. Although they beat profits, we had a gap up, and as soon as we gapped up, price went down. We could also see negative divergence. Price has been making lower lows while the RSI is making higher highs. So if this is truly a bottom, what we really need to see is price take out the $43 level. And we'll put that in red just to signify that is the current resistance. Now let's scroll to the left. Now typically in a high interest rate environment, the banks benefit, and typically what they see is a increase in revenue from the interest rate that they're charging individuals and entities. So for the moment, we're going to say price is range bound. We'll put a low at 39 and a high at 43 until we get a breakout to the upside or to the downside. Anticipate price continuing to consolidate in the short term. Thanks for watching. Subscribe. Please like the video.